Welcome in. I'm Michael Murray. I'm joined here today by Ryan King, the Senior Vice President of Corporate Development and Investor Relations at Calibre Mining Corp. Ryan, great to have you with us today. How are you?
Hey, I'm very good, Michael. Thanks for having Caliber on the show, and I look forward to the discussion.
It's a pleasure to have you here and to be discussing. Ryan, let's go ahead and jump right into things. We're going to get some perspective from you and Calibre today on what's going on in the gold market, and then also a few things specifically happening with Calibre. But let's go ahead and start off at a high level. What exactly is going on in the gold market right now?
Well, I mean, if I had a crystal ball, I would use it and and help to benefit from it. But it's tough. I mean, it's tough to see what's actually going on because the gold price is actually trading in tandem with the U.S. dollars and U.S. Treasury as it goes up in price, and that has not been historically the case. Gold price has historically been inversely related to U.S. dollars. So it's kind of interesting how this is happening right now. But we do know that some of the biggest buyers for gold, for physical gold right now, has been central banks. Central banks around the world have been significantly increasing their ownership in gold, and uh, that's a little bit telling because some have also been selling treasuries as well. So, kind of indicating that maybe some of the moves the United States or the Feds have been doing historically or in the last little while have shifted people's thinking or shifted different countries and different central banks thinking about either volatility or maybe some different sanctions that have been put in place around the world by the U.S. So, central banks, particularly China, have been increasing, and Russia, different countries, Turkey, Saudi Arabia, even now has been increasing gold positions or gold exposure. So that's been the biggest buyer, and we haven't seen any real traditional investments. In fact, we've seen gold ETFs having outflows out of their investment vehicles. So, yeah, it's an interesting time that this is all happening, and of course, generally, a time like this where we see potentially rates coming down, that's actually very positive for gold. And yet now that maybe shifting a bit to be delayed due to some numbers that are coming out from Chairman Powell and others. But yeah, it'll be interesting to see what happens. But nonetheless, the biggest buyers are increasing. The big central banks are increasing the price of gold. And actually, I think we just heard Goldman Sachs, that traditionally has been kind of anti-gold, maybe now talking about the foreseeable future to $2,700 per ounce, and here we are at $2,300 an ounce, already up maybe 10+% year to date. So interesting times.
Absolutely. So it's kind of an interesting point that you made there at the end, and to kind of double down on this point and close it out, I want to double click on that a little bit and speak to why investors should be interested in the gold market right now. Right, you mentioned it there with Goldman Sachs having a target at 2,700. Is that the main reason, and what other reasons kind of can you run through succinctly as to why investors should be paying attention to gold right now?
Yeah, and I think some of that has to do with the reasons I was mentioning before, that we're seeing the significant buying from central banks, but really a lack of buying from your traditional investment sector. So you've got the central bank buying. Gold is kind of three things, right? Central bank buying, jewelry, and investment purposes or insurance, safe haven asset, right? And we haven't seen a lot of buying from a traditional fund or investment vehicles looking to get some exposure to gold. And why is that? It's hard to say, but I think statistics are showing us that less than 2% have exposure globally to gold or gold equities. Whereas if you look back maybe 15 years, kind of just before the great financial crisis, global financial crisis, we had about 5%. And then as that sort of global financial crisis happened, it got up to 8-9% exposure to gold. So I believe that as we're seeing buoyant gold prices and potentially, working towards higher gold prices in the next 12, 24-month period, that margins of gold equities or gold companies that are actually mining and producing the gold will be attractive for investors, and therefore could drive that interest level back into the space. Obviously, it's a cyclical sector, just like any commodity sector is cyclical. But in this environment where we could see rates being reduced, There's a lot of volatility happening. There's a lot of uncertainty geopolitically with what's happening in the Middle East, etc. Yeah, now's probably a great time to start looking at getting some exposure, whether it be physical gold, an ETF, or starting to look at some gold equities that have good potential.
Absolutely. So it's a really good point that you made there, and I think that leads perfectly into speaking about Calibre specifically now, right? So when you're looking at Calibre in the gold space, the industry as it stands right now, why should investors be paying attention to what Calibre is doing in this industry?
Yeah, so I mean, obviously, most boats will rise in a buoyant gold market. So most gold equities will rise when gold is going up in value. But it's hard for the investors to sift through what is quality, what is mediocre, and maybe earlier stage or higher risk and not as great quality. Not to say that early stage is not quality, but I think where the investors will go to begin with will be some of the gold producers, the larger gold producers, the mid-tier gold producers that have good margins on where the price of gold is selling at to where their costs are to extract gold out of the ground. And if you look at Calibre, obviously, we are a junior gold producer today. So today, what classifies as a junior is somebody that's producing between, say, 200 and 300,000 ounces of gold a year. So that would be classified as a junior gold producer. And juniors generally trade at the lower end of multiples, right? So on a price to NAV basis or price to NAV basis, juniors would kind of trade between a 0.3 to maybe a 0.5, right? And Calibre is in that space today. We're a junior gold producer that is actually transforming to a mid-tier gold producer. And a mid-tier gold producer would be a company that produces between 400 and 500,000 ounces of gold a year, right? And that size of company, where a mid-tier gold producer will generally get a better multiple. They'll trade between a 0.5 and say 1 times multiple, right? And Calibre's in the middle of this transition, going from basically a junior, as I mentioned, to a mid-tier, but also diversifying our portfolio because we just completed a transformational acquisition to acquire a development stage, construction stage, large-based gold asset in Newfoundland, Canada. So it's actually transforming us because that is a long-life, low-cost asset. It's also based in Canada. So we have a very diversified portfolio now that grows us into that mid-tier category, giving an investor exposure to gold, but also an exposure to a management team that has grown their business, Calibre, approximately 30% year over year for the last 4 years, and had a very fiscally responsible approach to that business in that we've organically grown and we've been doing it through operating cash flow to really to build out the balance sheet and build out the production profile. And then we've been layering on acquisitions, accretive acquisitions, to help us diversify and grow our production profile, but also really importantly, focusing on margin, cash flow per share. That's a focus for us. So that's why I think there's especially when you're looking at the macro piece. Do I believe that gold could go higher or stay at these gold prices? Because we are at close to record gold prices on a US dollar denominated basis, and we're record in almost every other currency. So it's an interesting time for that. Now, do I want to get some exposure to gold because I think that's a safe place to be, or put a percentage of my portfolio in? And then you want to look at these products that I've mentioned before, but I think it's also prudent to look at equities like Calibre that are transitioning and growing, but have been very fiscally responsible and delivering on expectations.
Terrific. It's a great point that you make there. So now that we understand exactly where you're at too, and we have the investor attention as well, can you really quickly, as we close here in a minute or less, lay out what the next couple of quarters and the next couple of years might look like for Calibre in terms of growth, in terms of targets, and where you see the company moving to as you move ahead here?
Oh, sure. We've talked a little bit about where we're moving to in terms of our size. But we've been really attracting a lot of new institutional investors because of this most recent transaction. It's called the Valentine Gold Mine. We're about 64% through construction. So very excited about this because in Q2 of next year, less than 12 months away, we will be delivering first gold out of Valentine that currently is a 14-year reserve life. So 2.7 million ounces of reserves. It's got a total of 5 million ounces of resources. But what's really attractive about this asset, we're fully funded. That's a key to deliver this mine. But what's really attractive here, and I have the key point to any sort of resource-based company, is to looking at what the company is investing in from a exploration perspective. Because if you're not investing in exploration, you're not going to be sustainable. You have to be investing in exploration to extend life and maybe find more to increase gold production. So one of the things I think that's really attractive about Calibre is that we do invest. We're investing approximately $40 million this year in exploration to see what could we discover, what resources we could expand. But as well, on top of that, is Calibre this year has given guidance that will produce 275 to 300,000 ounces. So a strong second half of the year is set up for Calibre from a cash flow perspective and a gold production perspective.
Outstanding. Well, really looking forward to the future here for Calibre. Thank you very much as well for the insights into what's going on in this market. Obviously, a lot of exciting things to come for the market at large, but for Calibre too. Ryan King, Senior Vice President of Corporate Development and Investor Relations, thank you so much for joining us here today and sharing your insights.
Thanks very much, Michael. Appreciate it.